Homebuyer Education, Section 10, Default Options, Loss Mitigation, and Alternatives to Foreclosure. When you think you can't make your mortgage payment, first review your payment priorities. Lenders and loan servicers recognize different kinds of payment delinquency. Lenders will work with distressed delinquents in different ways, depending on if it can be reasonably expected that they can return to making timely payments. Let your lender or loan service know if you have a crisis immediately. Do not avoid contact. Answer all letters and phone calls about your late payments. Show that you're willing to do the right thing. Keep careful records of all the calls and copies of all the letters. Explain to whom you spoke with and what was said. Understanding what services are able and not able to do. When you cannot make your payment, you have a reason or story related to your inability to pay. When you contact the loan servicer, they may not seem interested in your story. Issue is that they cannot make decisions based on stories. The criteria allowing you to keep your home when you cannot make payments are: you've had a decrease in income or an increase in expenses, expectations of you returning to making your regular payments. All loss mitigation and foreclosure alternatives are considered based on those criteria. Getting help. Contracting a professional on credit or housing is recommended. They are more familiar with the language of the servicers, and they should know the alternatives that are available. Nonprofit counseling services are highly recommended. Services are at little to no cost. They have your best interest in mind, but not all nonprofits are the same. For-profit counseling services, first priority is to make money. The fees are much higher. They recommend actions that require fees or refinancing when there are other options available. Possible resources of credit counseling or assistance with your loan servicer. The nonprofit agency that helped you buy your home. Your local FHA or VA office if you have an FHA or VA loan. HUD FHA Counseling Referral Number 1-800-697-6967. Fannie Mae Counseling Referral Number 1-800-732-6643. The National Foundation for Credit Counseling, www.nfcc.org, or 1-800-388-2227. In order to get help, there are things you must do. Be honest. Be cooperative. Accept responsibility for your situation. Be willing to make sacrifices and change your habits in order to keep your home. Keep your property well maintained so it doesn't lose value. Loss mitigations. These options allow you to keep your house. A repayment plan gives a fixed amount of time to repay the amount you're behind. You pay a portion of what is past due with your regularly monthly payment, also called a workout agreement. Forbearance agreement. It suspends or reduces monthly payments for a period of time. The lender will have you agree to make up the missed payments. The lender may use repayment plans or may add payments on to the end of the loan. Loan modifications are actually rewriting the terms of the loan to make the payments easier. The lender might extend the length of the mortgage or change the interest rate. This is done when the borrower has sufficient equity to cover what's in arrears. It's only done when the lender has reason to believe the borrower will keep up payments. A partial claim. The mortgage insurer avoids a claim by loaning you money to pay the insurance company, then holds a promissory note for the amount of the advance. You have to prove your financial problems are over or they will end soon. Alternatives to foreclosure, disposition. These options mean you lose your home. Pre-foreclosure sale. Lenders can avoid expensive foreclosure by letting you sell the property. If it sells for more than you owe, you keep the difference. If it sells for less than you owe, they forgive the difference. If it sells for less than what you owe, they forgive the difference. Assumption. Transferring the property and the mortgage to someone else. This very rarely happens. However, the lender may agree to do it to avoid foreclosure costs. Deed in lieu. You voluntarily sign over the deed to the property to the lender. This stops the foreclosure process. There are some tax problems, as in pre-foreclosure. You may pay income tax on the forgiven amount of the loan. Deficiency judgments. Regardless of the alternatives used, you can be sued for money that the lender lost. The court can order you to pay the difference between what the lender got back and the amount of the loan. Lenders don't always bother, however, because lawsuits are expensive. The reason you should know about deficiency judgments. If you negotiate pre-foreclosure sales or deed in lieu of foreclosure. Before agreeing to these options, ask the lender, is the mortgage note going to be canceled? Will the lender waive a deficiency judgment? Will the lender report the PFS or DI promptly to the credit union? How much time will you be given to find a new place to move? Happy endings after the crisis. There are generally two reasons you get into trouble. You fail to stick to the plan, or you have a crisis that your savings couldn't cover. Failing to stick to the plan is under your control. You know how important the plan is. If you want to buy again, start a new plan and stick to it. Crises are harder to control. Develop a financial plan that sets more aside to cover the unexpected, and begin rehabilitating your credit so you can try again.